now you know how your salary is constructed. But that got us thinking, how does somebody who's just starting out, perhaps someone who is earning less than 50,000 rupees a month, plan for all of their financial goals, their dreams? And so we decided to invite somebody who is indeed in that bracket of salary and who has some very interesting goals that they want to achieve. Stuti Bhatt, who is an influencer marketing executive, is joining us today. And to help her solve for some of the goals that she is trying to achieve, I'm joined by Nisreen Mamaji, who is the founder of MoneyWorks FS. Thank you so much to the both of you for joining in. Now, Stuti, you've kindly agreed to join us today because by speaking to you, I think a lot of young people will also learn how to plan for their financial goals. So let me start by asking you a little bit about yourself and tell us about what your primary financial goals are right now. And of course, they could change because you're just 22, right?
Yeah, I'm 22 right now, and currently the financial goals that I have, which are really major to me, is one, giving back to my family so I can contribute a bit of my share. And secondly, I'm planning for my master's, which is in near 2 to 3 years, and the cost of it is extremely high right now. And third is that I want to I'm planning to buy an apartment of my own, so on rent, but in somewhere around like Andheri West area. But that area is super expensive, so it requires a lot of savings, so it's very chaotic right now.
Have you put values to all of this before we go to Nisreen on her initial thoughts, Stuti? The first thing, of course, to do is to identify what you want to do with your money, which you have done. But the other thing to do, of course, is to ask how much all of this is going to cost you. So starting with the goal that you want to achieve, which is the most expensive goal, which is that education, what do you want to do and how much do you think it's going to cost you?
So I'm actually very interested in theaters and pure drama. So I want to pursue an MFA in acting, which is there are top 3 colleges that I'm aiming for, but I'm still exploring my options. So one is the Juilliard School of Drama, and the second one is in NYU, and the other one is David Griffin in Yale. But the only issue is that all of these cost more than 1 CR. So I'll like combine 3 years, like even if the tuition fees, or let's say you get a scholarship, but still there are certain basic expenses that you might have to go through. So all around, when I tried figuring out, it's easily going to be rounding up to 1 crore or something like that.
3 years, you're saying? Over the
Sorry?
course of 3 years?
Yeah, 3 to 4 years, because some courses have like in David Griffin you have for 3 years, then in Juilliard you have for 4 years. But there's they have tried helping the students like us where your tuition fees can become zero now from 2024. The batches have started, but the living cost of New York City is extremely high.
Yeah.
So if you have to consider that also, and like you have scholarship options, like you have in-luck scholarships and other scholarships as well, but there's only a limit till when they can provide. Then you have to resort to loan and other options. So that can be really, really pressurizing at this stage when you're very confused.
Okay. So as I understand it, you're currently living on rent in Mumbai, and you want to rent out an apartment by yourself, right?
So yeah, just small 1 BHK.
Okay. So as I see it, those are the 2 major goals that you have. So Nisreen, let's go to you first on your initial thoughts. She's 22 and she's already made her plan, which is a big deal.
Sure. Actually, she's very, very inspiring. I must say congratulations to you, Stuti. It's lovely that you have started thinking for yourself, having your goals, actually listed with, a timeline and, the amounts that you want to also save towards. So it's really very commendable, and I hope that a lot of young people take inspiration from you. Okay, now let me start with your third goal, which you mentioned, which is the one that you want to go for your MFA. You've already, kind of highlighted that the current cost is about 23 lakh rupees because you would be getting a, tuition waiver. So the additional expenses is what you are saving towards. Now, if you can invest 10,000 rupees per month with an annual step up of 10% for the next 5 years, you would be able to collect about 10 lakh rupees towards that goal. But also, having said that, if the current expense that you are saving for is about 23 lakh rupees, after 5 years, between 8 to 10% inflation will apply to this particular institute or any educational institute, because the education inflation is between 8 to 10%. So you would be looking at the total cost that you have to spend between 33 to 37 lakh rupees, provided that you get a tuition waiver. Okay. I'm sure you're already familiar with these scholarships, but I will just take you through it. You can apply as far as the loans go to HDFC Credila, which will give you a maximum of 60 lakh rupees, and the rate of interest is between 11 to 12.5%. You can apply to InCred. Total available amount is 50 lakh rupees. Again, it's in the range of 11.5 to 13.5% the interest rate, and it covers 100% of the living costs. Avance, 50 to 60 lakh rupees is the availability. 12 to 13% is the interest. They give you a flexible repayment option, and also the approval is faster. And Leap Finance for USA, which is around 40 to 45 lakh at 9 to 11% for the dollar loans. Again, the EMI is repayable in dollars itself. You must have already looked at the scholarship options, but I'll quickly encapsulate. You can look at the International Student Support from Juilliard itself. You can look at a Fulbright Opportunity Fund. You can look at Indian trusts, like there are Tata Trusts, there is Narottam Seksaria Trust, etc., which do give students this opportunity for living and for tuition. And also there are artist-specific foundations, especially in New York, which will cover emergency housing. And you can have your family kind of sponsor you to the range of 5 to 10 lakh rupees. So between these three options, loans, scholarships, and a personal family trust, a family or a friendly loan, you could possibly come up with the figures that you are be looking at. Also, alternatively, just a word of caution, in case that those amounts are insurmountable, you could also look at acting schools within, India as well, in case you don't meet the budgetary requirements. And, you can look at the NSD, you can look at the FTII in Pune, etc., where, there have been alumni who are very famous, and, you don't have to get disheartened if you don't come up with the funds. You also want to send back some money to the family, and
we'll get to that. Nisreen, we'll get to that in just a bit, but I do want to talk a little bit more about this. So, Stuti, as I understood it, you want this in the next 3 years and not the next 5 years. Is that negotiable?
It is negotiable, but I'm a kind of person, like, if I do fix a goal on it, I'll try my best no matter how to achieve it in time. Like, maybe I can have another source of income. Like, right now, if my income is less, I recently heard that, there are other passive sources of income, which I'm aiming to explore more, so that I can increase my income and at the same time savings.
So tell me a little bit about that. So you're talking about doing additional things that can be monetarily remunerative. Is that what you're saying? And what are the kind of things that you would consider doing?
So few things maybe. So I'm really good in graphic designing as well. Or like, I love acting, of course. If I get any freelance projects and I'm working on myself, bettering myself every day. So if there are any modeling assignments or anything, I can try that, because you do get good money. So at least it's a good source of income. And I still need to research a bit, but like you have SIPs and like daily goal savings, where I want to invest more so that at least I can have some solitary base. And in case if there is any emergency or in future, my value will increase in that. So,
no doubt. So then let me ask you a couple of questions, right? Because, and this is a challenge, Stuti, that a lot of people face that are just starting out. The fact is that you need to build from scratch, and that's always very, very difficult to do. And the hard part is putting that initial work in, but once you put that work in, then there's compounding that takes place. But the point is that if you say that you can increase your earning, in a conservative estimate, Stuti, right now you said that you're earning 39,000 rupees in hand. How much can you bolster that by?
I'll say around 45.
Okay,
something.
So you can add another 6,000 rupees, and so therefore, when Nisreen talked about a 10,000 rupee SIP, you are currently already making some investments. Can you take me through them?
So currently, I'm doing, it's just one investment that I'm doing because it just started out. So there's an option of daily goal saving where you're saving rupees every day.
Right.
So it looks like a very small amount right now because every day, but over the time, it like at the end of the month or maybe at the end of 2 months when I see I have a good amount left with me. And I really personally believe in investing in gold a lot. My family has done it for generations. So this is something that's very personal to me for myself and it's a solid asset.
Okay.
That's when I love gold.
So,
Yeah,
but
that is
what form of gold are you buying?
this is completely digital gold. So, like, PhonePe has an option over here where it's like a specific jar. You are saving like 50 rupees every day, and at one point, let's say I want to buy some gold. So they have a partnership with a brand called Carrot Lane, and I can buy anything from that, or even I can sell. That same gold online, and I can get immediate cash. So it's like very, like immediately I can get cash from
Yeah,
that.
yeah. So, okay. So, would you say that saving 10,000 rupees a month without accounting for that extra 6,000 rupees that you've said, that 10,000 rupees is possible for you to do right now?
It is possible, but because I had recently for past 2 months tried saving 10,000, but that was for a specific purpose, which I have spent now. But it was really hard actually because sometimes there are times when you have to compromise on your basic needs as well when you're trying to save a huge chunk provided. So you have to step down from certain luxuries that you used to enjoy, maybe divert towards a simpler lifestyle. And I won't say compromise, it's just adjusting to a simpler standard of living for a few years, and I think that's worth it if you were aiming for something higher.
Got it. Okay, so 10,000 is possible. So therefore, Nisreen, let's see, two scenarios. So first, I want you to weigh in on this whole hog investing in gold. As much as Stuti likes the idea and traditionally it's worked, I'm just wondering from a standpoint of 3 to 5 years, if you're saving towards something that is so close to her heart, whether putting that entire amount of money in gold is appropriate, one. And two, if you have a base case of currently starting with 10,000 rupees and maybe on a conditional basis having 6,000 rupees or thereabouts added to that, if she can increment her earning. And I'm guessing that if she takes up those projects, there'll be fits and starts. There'll be periods of time when she's earning a large sum of money, maybe 12,000 rupees, but there'll be months when she is not. So assuming that you can increment that, how would you invest it and what kind of SIPs would you suggest?
Sure, that's very interesting what Stuti does, and definitely, she could continue. But for process of diversification, you can definitely, I would suggest that you also look at equity mutual funds. Now, since your tenure is, around 3 years, I wouldn't recommend that you go into 100% equity funds, but I would surely suggest that you look at a multi-asset fund, or you look at a balance advantage category or an equity savings category, which is typically a dynamic asset allocation kind of a category, where the fund manager will decide the allocation towards equity, towards arbitrage, and towards fixed income or debt. So that way, you would have the ideal combination between the three. And for somebody who's investing for around 3 years, this would be, a very good strategy. So what you can do is you can invest, say, the bulk of the money into a dynamic kind of, asset allocation funds like the earlier three that I mentioned, say 70 to 80%. And 20% maybe you can go in for, a large cap fund, basically a 100% large cap fund. So we'll try to minimize the amount that you're investing in 100% equity, and we'll try to maximize the amount that you're putting into the dynamic category. So if you're investing for about 3 years and say around 6,000 rupees, at the end of the term, you can expect about say 3 to 4 lakhs, in your as your savings. If you extend the term, then you have two options. One is that you can go in for slightly more riskier alternatives, which are like 100% equity funds. Also, the power of compounding will work for you, and it's likely that your investable surplus also can increase. So you can try to have a target of 10 lakh rupees, so that if you reach it earlier and the CAGR that you receive, or the appreciation of the investment is higher, then you can always make a plan to leave earlier.
Nisreen, would you be able to give us a sense, for example, if you were to, and I'm not sure if you build that into your formula, but 10,000 rupee SIP right now, starting with full equity for a period of 3 years, and then over a period of 2 years shifting out and reducing that allocation to equity, what would that emerge as over the course of that 5 years? Do you have a rough sense?
if the tenure is longer, then you can expect a compounded annualized growth rate of, say 13 or 14%. If your tenure is shorter, then it would be safe to only project at the rate of, say, between 9 to 11%,
Sure.
just to be on the safer side so that you know what to expect and you can plan your finances accordingly.
Yeah.
So therefore, it is 5 years. You can also look at certain large cap funds. You can look at Nippon India Flexi Cap Fund. You can look at Mahindra Large and Mid Fund. But if you're going for the shorter end of the curve, then you stick to multi-asset funds. Maybe ICICI Prudential Multi-Asset Fund, HDFC Balance Advantage Fund. You can go for Franklin India Equity Savings Fund. So if you're investing for a shorter period, then your investment towards dynamic funds would be definitely higher. Also, the return expectation would be around, say, 9 to 10%.
How much gold? How much gold should she have, Nisreen? How much gold should she have?
So, at these levels, honestly, one cannot project what are the, added alpha that you would be getting on board from here onwards, honestly. With equities, we can expect a certain kind of a life cycle and certain projections. So I would suggest that, maybe you can also reduce your allocation towards gold and, invest a little more in the multi-asset fund, which already would include silver and gold as commodities, So rather than you taking the call, maybe you can depend on a fund manager to take the call towards commodities like gold.
Stuti, so we've thrown a bunch of information at you, and I understand that that can tend to be a little bit overwhelming. But the bottom line is that you're already well on your way towards, if not necessarily achieving a Juilliard, because that's something to aspire to. And as Nisreen has pointed out, if that doesn't work out, there are options here in India as well, and you're working towards building a corpus. So I just want to ask, have you contemplated taking an education loan? And if you have, then do you have any questions that you want to ask Nisreen about managing that? And do you have any questions about the suggestions she has made on building your portfolio as well?
So I do have. So firstly, about coming back to loan, let's say that, I've recently heard that when you are taking an education loan, you need someone who will get like a guarantor, right? But let's say I'm planning to completely, finance it on my own. Like I do not want family support. Like I'm completely wanted to, finance on my own. Is it possible for me, like if I do not have a guarantor or anything? Like because I'm earning right now, I have a fixed salary currently. So I'm very confused about that. Can I be my own guarantor or not in that?
Yeah.
Like, is it mandatory for me to require support from anyone else?
Collateral is the question. Nisreen, what's the answer?
Yeah.
So I'm sorry to sound like the voice of doom, but yes, you will need a guarantor and you will need collateral because, you've just started. So you don't have much of an earning history, you see. So when the lender is giving you money, obviously they will be looking at your credit capacity, and because you've just started working, you don't have much on the records in terms of, bank accounts showing you larger sums of money so that they are able to, because there's a list of, a checklist that they also have to go through before they can, offer you a loan. So let's be very realistic and, guarantor and collateral both will be definitely required by HDFC Credila, by Incred, by Avance, by Lead Finance, all of them. So, that is something that you will definitely need, a guarantor as well as collateral. So think, clearly that what the requirements are and don't be confused. We're always there to help you.
Yeah, of course. And I'm glad that these questions are being asked and the answers are given. Stuti, so that answers your question. Therefore, what else would you like to ask? Because I think that this is a great opportunity for you to ask about the start of a plan. You're 22 and the canvas is empty. You can paint on it.
So I have certain doubts. So like as a person who will be investing in, let's say, funds for the first time, so I'm a complete, like, I have zero knowledge about this. I'm still searching about it. So I love hearing what you said, but like some of them, like I was still processing, like, okay, what does that mean? Like when you said what are large cap funds and certain other investments when you said. So can you like break it down in a bit simpler way so that it'll be easier for someone like me who has never invested before?
Great.
Who doesn't know
I love
knowledge.
it. Stuti, absolutely love it. Okay, so let's break that down. Nisreen, you have suggested a balanced advantage fund, all right? So, Suti, the first scheme that, okay, certain things need to be clarified. Because you're 22 years old, you're able to take more risk than other people would otherwise take. The reason why Nisreen has given you a balanced advantage fund is because your desire to go to Juilliard is just about 3 years away, and equity markets can move in erratic manner, right? So a couple of months it can gain, but the next couple of months it can lose the amount that it has gained. So just take 2025 for an example. In the first couple of months of the year, you have certain equity market indices that have gone up by 20%. So portfolios may have gone up by 20%, or rather, actually, it's the other way around. It actually fell by 20%, and then over the next couple of months, it actually went up by 20%. So somebody who'd started in January of this month and put 10,000 rupees, say, would have dropped 20% and then gained 20%. So they've ended up with 10,000 rupees. So you have to have the willingness and the ability to take that risk. Tomorrow 20% is going to go, but you want to go to Juilliard in 3 years, so you can't take that risk. So the question is, are you willing to extend that plan to go to Juilliard by another couple of years?
Exactly.
Can you, so is that negotiable? Can you push it by 2 years?
I can try.
Okay, so from that perspective, then what we're suggesting, Nisreen, to her is a pure equity portfolio. With that in mind, let's talk about 3 options that she can start with, and perhaps we can also talk about passive funds, maybe a combination of, and I don't want to put words in your mouth, but maybe a combination of a Nifty 50, Nifty Next 50, and another couple of active funds. What would you suggest?
Well, definitely, I think, Alex has already mentioned a few suggestions which would make a lot of sense. You can look for passive funds. You can look at the Nifty funds, which are, the large cap funds, the Nifty 50. Also, as you rightly said, the Nifty Next 50, which would go on to, maybe in the mid cap space. Largely, it would continue in the large caps, but also give you index funds in the, between 50 and 100 in the capitalizations. You can also look at a few actively managed funds also. So, what you need to do is go 50 to 60% in a passive fund or an ETF, where, you would be able to match your risk appetite, as well as, control the costs of the managing the funds itself. And say 30 to 40%, you can go in for an actively managed strategy. So one can recommend to you a Mahindra Manulife Flexi Cap Fund, maybe a Motilal Oswal Mid Cap Fund. So just stick to, 2 alternatives. Let's not make it too diversified. If you extend your time, the idea is that the volatility will get reduced, over a period of, say, 5 to 6 years. And the possible expectation of return can be higher, Stuti. So that's the reason that, one is recommending a longer tenure. In a 3-year time frame, one gets very restricted with choices because one cannot recommend a 100% equity fund. So the possibility of returns will be basically in the range of between 7 to 9%, So if you extend your time frame, then you have the option of going in for 100% funds, which are, equity based, and also expecting a return which is higher than the 1 to 3 year range. So you should be looking at 5 years upwards. Yeah. Monitor the portfolio. Look at passive funds for about 60 to 70% of the portfolio, and actively managed funds for about 20 to 30%. Yeah. So these are all the choices, and the passive funds is not much to choose from because they all be following the index. So it will be a very simple task.
Yeah, absolutely. And Stuti, hopefully that answers your question. And I can understand where you're coming from, but the best thing to do is to start to dive right in. And you've already made a dent into what you want to achieve. So thank you so much for joining in. I wish you all the best, and I hope that the dreams that you have are realized. So thanks so much for joining in. Nisreen, that brings us to the end of this conversation. Thank you so much for joining in and for taking the time. Viewers, hopefully this conversation has given you some idea as to how to plan your own financial goals. And if you've got a specific goal that you'd like to talk to us about, let us know in the comment section. In the meanwhile, stay tuned. This is NDTV Profit.